Hey guys, how you doing today? This is Riley or the Big Thinking Aussie here. Today we're back for the first episode of my new series, the Finance Wrap. It's basically going to be a series where I talk about relevant news to the Aussie stock market, as well as what's going on globally, a little bit, some basic information, and what kind of products are going to be highly demanded in the future, I guess. Uh, so there's a lot more to come on this channel. So there's going to be a new series for business plan ideas. So basically for young people wanting to get started, we're going to look at kind of how to put your foot in the door and take your idea and make it a reality. So that's coming later on in the week. We also have videos perhaps on valuation of stocks, technical analysis, ways to generate capital, how to start investing. So all that stuff's going to be to come. Also, hopefully, I'm going to try and make some in real life videos. So kind of like what I get up to, basketball, sport, that type of thing. So could be some of that. There might be some changes to the kind of lighting, audio. That's stuff I have to work on down the line. Maybe we'll have a setup video and whatnot. So today on our episode we're going to be talking about the January effect phenomenon, basically how it works, as well as the Banking Royal Commission findings, which just came out in Australia, how they're going to impact the market. So we'll delve into that, as well as baby formula, so a product that is very highly demanded all throughout Asia, what it means for Aussies, and plenty more today. So stay tuned, guys. So the January effect is basically where there is an increase in stock prices during the month of January, where basically there's above average returns in capital gains. This is usually for small cap stocks, which have generally outperformed the market in January, especially toward the middle of January. Now it sounds easy enough to make a quick buck, but how can this be true if the market should be based on random movements and efficiency? Well, one possible theory for the January effect is that a lot of jobs have December cash bonuses, in which could be put towards investments. Another possible theory is just the psychology of a New Year's resolution. It might be for some people to invest more. Or it could even be due to the timing of tax payments. We don't really know, because it's a market anomaly. So, the question I'm really asking is it present in the Aussie stock market? And one article that I read basically said that perhaps it could be even more so prevalent in our market than the US. This is due to the fact that since 1990, the median monthly return for the ASX 200 was at 1.8% compared to the 0.6% median monthly return in all other months. So that's in comparison to the US, which had 1.7% return for January, compared to 0.8% for the rest of the year. So that's just some interesting figures that I thought I could share. So another question is, does it still exist today? Well, investment banker Sidney Wachtel in 1942 first discovered the phenomenon, and many would argue that it has been very prevalent, maybe 20 to 30 years ago, but since then it's sort of changed because the market has sort of adjusted itself to prepare. Also, there's a lot more knowledge now about the January effect. I'd say that in Australia it's a bit more unpredictable, because in 2019 the ASX 200 started slowly in January before trending up slightly, and even last year in January 2018 the market dipped altogether. So I guess the point of this discussion is to kind of come to the conclusion that past performance is never a reliable indicator of future performance, especially for the stock market. Just because someone might think that a phenomenon has existed and there's results in the past doesn't mean you're going to make your money back. So guys, our next topic we're going to be talking about is the Banking Royal Commission findings. So basically on Monday evening, the findings were released, including several of the big four Aussie banks being held responsible for misconduct to consumers and basically acting in their own interests. ASIC heard cases of customers being charged for a lot of services which had never been provided, especially related to superannuation and mortgage broking. So without delving too much into the details of the report, you'd assume that ASIC would have a field day. Through heavy regulation toward the banks, due to all the misconduct that had been basically heard, and that dated back several years, several decades in fact. Anyway, so you'd naturally assume that the stock prices would fall due to the besmirchment of the reputation of the big banks. Wrong. In the 2 days since the reports were released, ANZ was up 6.5%, Commonwealth Bank was up 4.7%, NAB, who was the worst perpetrator according to the findings by ASIC, rose nearly 4% in the days since the report findings were made public. It's likely that due to the Royal Commission hearings dating back to last year that investor confidence was low for a long period of time. People feared the worst, and the share price was at quite a low in the last couple of years. That's for all the big banks up until this point. Since the reports were made public, it's likely that the bank's stock prices actually increased because investors that were fearing much more damaging findings. Several banking analysts, for example John Mott, noted that ASIC's report included tough talk yet soft recommendations. Now, speaking on behalf of the average Aussie, I believe that the misconduct by the Big Four is still shocking and more action and regulation is needed. However, looking on the bright side, it may be time for other banks outside of the Big Four to become more prominent, such as Bendigo and Adelaide Bank or Bank in Queensland, even Suncorp Bank West, to gain consumers' trust and eventually compete at the level of the Big Four. Okay guys, our last topic for today's video is baby formula. Now, baby formula is becoming one of the most highly demanded products, consumer products globally in fact, with many parents across Asia looking to Australian suppliers to supply the organic style formulas. Aussie supermarkets, or some, have imposed 1 or 2 can limits to customers. Shelves are being left empty in some highly populated capital cities, meaning that even our local mothers aren't able to get that formula to feed their children. So it's becoming quite a big problem. So could this be a good future investment in Aussie companies, such as for the ASX code BUB or A2? As sizable exports for the product are seemingly booming at inflated prices. A recent announcement by A2 suggested that the product supply requirements would actually be better met going into the future, causing a positive change in its share price. So the question I have to pose to you is, do you think that baby formula stock is a good investment going into the future? Okay guys, that's going to be the end of the video today. If you got this far, thank you so much for listening to me ramble on and try and talk about some topics. To be honest, I found it quite overwhelming how many cuts I needed, how much of a perfectionist I am, especially with making videos. So, going to improve going into the future. Today is just basically a baby step. So, thanks so much for watching guys. If you could leave a like if you enjoyed the video, that would be great. Subscribe if you want more, and leave a comment for any suggestions and feedback. Cheers guys.